And I forgot my coffee downstairs.
I didn't have it recording to record you saying. You just said the most epic thing ever.
All right.
But now it's recording.
So yesterday we started getting into, the introduction of position sizing at the end of the reengineering session, right? And because it hit me that, I always go into the position sizing, and it's on my agenda to do that the fourth week of month 2, and just to really drill it home. Well, I realized that I need to move that part of it on the first time I talk about hourly quarters. I need to move it to there and make you guys just facilitate it in your brain more than anything else, right? Because I built a bunch of tweets about it because I realized how naive this current class is when it comes to position sizing, and build a whole freaking indicator right here. Right? Even put the compounding effect. So this is from that website that I shared. So where is it? Anyway, so and then I watched that video that Arnie posted, right? And that dude's a great dude. He actually passed away, and but he doesn't. It doesn't matter if you're harvesting risk premium by selling options. It doesn't matter if you're taking directional linear bets in the future space like we do. It doesn't matter if you trade company stocks. It doesn't matter if you trade whatever, right? It all comes down to basic principles, right? Do you have a macro to your micro? And when I say macro, I'm not talking to the 50-10. I'm not even talking about company fundamentals, but something higher, right? That is going to push it forward, right? Right? And then the micro, I would say you have the macro and then you have the TA, right? One's bigger and is so for example, right? Volatility traders, right? Wait for, volatility events, and then they feast on that volatility event for 6 more months, right? Trend traders use the daily chart, right? And they wait for, let's say they're a trend trader in company stocks. Let's use Oliver Kell, for example, because I just talked with him this week and he's the most recent in mind, right? So he trades US based companies that are worth more than $50, right? And mostly they're in the tech space. Now, he knows that he has to wait for a certain time of the year to put majority of his size on. He knows that the NASDAQ will give you 2 to 3 really good trends throughout the year, right? And that, his job is to manage his position sizing, very lightly when the NASDAQ, even in his company stocks, even when his companies might be, the NASDAQ might be going down like it is right now, and it could be like PLTR, right? So if you look at the NASDAQ, right, it's been down, right? PLTR has been up, right? So he knows that this is going to be a leader of the next rotation, right? And he's got majority of his size of this and 3 others. But majority of his positions are sitting in cash until the NASDAQ picks the trend up, right? So the NASDAQ just picked up his trend right here. This was his little wedge pop, crossing over the 10 and the 20 EMA, retest, go, right? And so now this would be his macro symbol, his market conditioning tool to tell him the condition is starting to set up, and he's okay if it gets stopped out because he'll tell you that what keeps him in the game is getting stopped out is the position size, right? But this is his macro view, right? So this is the market condition view for him to go into the companies and start putting true size to play for that 2 to 3 times a year that the NASDAQ gives you a multi-month trend, right? For us, right? For us, so you got macro, you have TA, you have position sizing, and discipline, right? Those are the 4 real elements that you need. Now, see, so I'm just going to say market conditioning, right? Instead of macro, right? Instead of macro, because most investors use the macro data to decide what area of the market that they're going to put their flow into, right? And they're going to take it out of this area of the market and flow it into this area of the market. So they use macro data because it's synced with the economy, because if they get on the right side of the economy and they line it up with the right area in the market, like they don't have to do the heavy lifting. The macro data does it for them, right? I just showed you the market condition that Oliver Kelly uses to, start putting a majority of his position size to work in individual company names. Now for us, right? For us, right? Because we're intraday traders, what do you think our market condition or our macro tool is? What do you think that higher time thing that does the heavy lifting for our trade strategy is? No. That's the live price portion. P12 in the daily profiler, yes. Right? That's your market conditioning tool. That's going to do the heavy lifting because it's telling you which direction or where you are within the daily candle. Right? So, right? You know when to put size on, when to turn systems on, when to turn systems off, when to shoot with lower position size, when to shoot with higher position size, etc., etc. You see the function of that now. Now, would it make sense if I was an intraday trader trying to trade off of actual economic data? Obviously, we have volatility events, like we're about to go on to NFP Friday. Like, I can put 2 and 2 together that NFP Friday is going to put volatility into the markets. And based off of certain numbers, this is what I can predict that it's going to give you for intraday. Yes. But, like, would it make sense for me to try to incorporate economic data as an intraday trader, or the market using economic data as the market conditioning tool to tell me when to turn my systems on and off and adjust my position size based off of economic data when I'm an intraday trader? No, it doesn't make sense at all, right? Because the time frames don't align. Now, it's always cool when I'm in a bullish trend and economic data is telling me, that the economy is doing great and we're above NFP Friday and previous month 50%, then I just know at 1800 to like 10 o'clock, 10:30, my job is to buy the dips and find the lowest possible price because we're going to end the day higher, right? All right, so we have that higher time frame market conditioning tool or whatever you use, right? We use the daily profile plus the P12 to help us know what trades we turn on and off and how to position size, right? And that's what you're seeing a lot of these like videos of successful traders that all tell you similar, they might use different lingo, but they're all going to be telling you the same thing, right? So I built this last night along with, let me pull it up, and then we'll get back into the captain back test. Along with 2 tweets that I want you guys all to review and make sure I wrote the threads. Make sure you read both of them, and then this indicators can catch at the end, right? Right. So just simple way of how to use it, and I'm still testing it, but I'm pretty sure I got it right. I just need to make sure the automation of the tick value is correct, right? So into your starting balance, your account balance, risk per trade, right? Which, how do you determine your risk per trade? How do we determine our risk per trade in this room? How do I teach you to determine the risk per trade? I'm so mad I left my coffee down. Yeah, obviously, like, that's risk per trade, Wagner. But what do we look for to determine if we're trading 2.555710% risk per trade of the account, which is $7,000 in this example? We wait for the proper market conditions, which is based off of the daily profile and the high of the day, low of the day, right? Right? That would determine that, right? Your stop distance, right? Right? What does that mean? That means, let's say that this is our stop, right? I mean, this is our entry. Let's say that whatever, like, we want to enter the moment we breach this previous hour 50%, we want to go long, right? Because this is the higher time frame, low of the day or level, and we're expecting a reversal, et cetera, right? But we know we have to wait for previous hour, especially if we're waiting for a reversal. Like, we took out the previous hour low, we sucked back in the range, we breached the 50%. So our job is to buy somewhere in here. Well, what's the invalidation of that strategy? The bottom of this, right? Like, this is the line that says this is wrong, right? So now, a minute. Somebody in my fucking house. Okay, cool. All right, all right. So, right, like, where's the invalidation point is right here. But look, we didn't get this awesome freaking strategy. I mean, we didn't get this awesome position size, right? Some days, oh, that's my neighbor's motorcycle. What a freaking chump. All right. Sometimes this previous hour 50% in this trade model will be 36 handles. Sometimes it'll be 20. Sometimes it'll be 15, right? It just depends, right? So how do we continue to take this trade regardless of this distance? We can't move our stop. Why don't we move our stop location? That's the invalidation area. It doesn't change. Yeah, exactly. Right? So we come over to our position size calculator, right? And we put in 43 handles. All right. And we can see that it gives us a 0.41 contract. So we shouldn't be trading the NASDAQ. Right? That means we can't take any contracts. So we're going to go, that means we're extremely over leveraged. Right? So we come over here to the MNQ and we have the same settings set up. And we can see we can take four contracts, right? Based off of that, right? That location. Now your job, right? Let's say we're targeting previous hour high, right? So we enter our four contracts. We can see that our stop is going to be worth 242 and that our TP is going to be worth 442, right? Now, right, if our job is going to be to get our entries as close to those stops, our invalidation points, not none of this bullshit where I take a very tight stop right here and then place my stop right there. No, the invalidation point is right here. That's where the stop goes, and we position size based off of that. Do you guys understand that? All right. So we see that during this strategy, right, based off of the position, the location of the entry and the stop, right, it was 35 handles, right, which is 244, right? But our job is to get our entry, if the market allows it, as close to that stop as possible, right? So let's say we're able to get it 19 handles away, right? Same everything else, right? We come over here and our stop distance goes from 43 to 19. Right now we can see that the amount of contracts we're allowed to trade is 9 micros. Right? And then like, because I'm not actually 9 micros away, this is reflecting it, but it's the same amount, right? It's usually like $10 to $50 off, give or take, right? But now, let's say, what's the point? So like, what is going to change, right? We're fixing our stop loss, regardless of the distance between entry and stop. If we are way far away from the entry, we're going to enter one, like whatever, like 1 to 3 contracts. If we can get it really, really close, we're going to get to trade 7 to 8 contracts off that model, right? What does change though? So we're fixing our stop price, right? So regardless of the model, right? Let's go look at it on the PowerPoint. Right? Regardless of the location of the stop and entry, whether it's 2 or 5, right? We know that our loss is going to be between 100 and like 110 on this strategy. But what is open? What is open? Not risk to reward, Scott. I didn't say anything about a damn risk to reward. Our profits, right? So now, do not fall for the fallacy that you should be taking like the same model, right? That you should be taking tight stops from entry to stop so you can get more location right here. If your invalidation points down here and the market doesn't give you the opportunity, right, to get closer, like remember, we took out previous hour low, sucked back into the range, breached that time fractal 50%, now we can buy the dip, right? However you decide to enter your model, blah, blah, blah. Your job is to get that entry as close to your stop loss, your invalidation point right here, as possible. Why? Because you get to trade more contracts. You know whether you take the position from here or whether you take the position down here, right? In relationship to the stop, your stop is going to be pretty much fixed, right? 4 contracts versus 9 that both can cost you, let's say, $107, right? And then your job is to ride it up to TP. Well, which one's going to be more or less? The contract, how much more? The TP, right? We said we were going to enter 4 if we were able to enter here. We entered 9 down here. Which one's going to be more if that strategy wins? The 9 contracts, right? So you keep that in mind, right? Now, why am I talking to you about this type of position size? Oh, hell yeah, I did bring my coffee up. What do we have a hard time getting past? The 14-day risk of ruin, right? We know that we struggle to get models, right, out of, where is it? What in the tarnation? We struggled to get our systems out of this area. Right? Why do we do that? Because we don't just trade one system throughout the day. We slam like 4 to 5 different models and blah blah blah, and that magnifies like how much pressure you put on that account during that 14-day risk of ruin. Like one of them is going to be in this kind of market condition where it's declining on the consecutive loss rate or just flat. 1 to 2 of your little models, because you guys don't just trade one, will be based off of, will be in that market condition. One will be in a pop, right? And one might just be taking a normal win, right? So the reason I'm teaching you this type of position sizing first is because this should be your primary way of position sizing, right? Yes, there are 2 types of, well, there's actually a hell of a lot more, right? And you can ask me in Twain, right? Like I literally built, you can use ATR, we won't get into it. Right now, the main style of position sizing that you guys know now is fixed versus risk per trade, right? What do you think a fixed position size is? I don't know what 1-to-1 is. Always take X contracts, no matter the stop loss, no matter whatever, right? So we're going to take 1 mini on every single trade, right? And then you have the problem with that is that how do you grow your account and how do you protect your account, right? Like if I have if I trade 1 mini and I just magically get through like the 14-day risk of ruin period, which you can on certain, everybody can get through it if the market condition lines up and you get lucky, right? But let's say I do get through that 14-day doing a fixed stall position sizing of 1 mini, right? And I start growing. In the beginning, my account's gonna look like a damn rock star, right? My percentage gains are gonna be amazing. But what happens when that account gets to the upper extreme of the account size, right? What's gonna happen to this curve, right? As we start making money in it, what's going to happen to the curve and the compounding effect? It's going to flatten out. Why is it going to flatten out? No compounding. And so that leads me to my next part of the conversation that I would like to have with you guys. Going into 4 steps, you click on this cool little website, right? Called the Compounding Daily Blah, right? And yes, I get it. Everybody's like, you can't trade off of a number, blah, blah, blah. And I'm just like, yeah, actually, you can, right? If you're confident in your strategy, you can, right? Okay, so let's say you have a 300 or whatever your profit count stop loss is, because a lot of you guys don't trade live accounts, right? So whatever your profit count is, we'll say $3,000. Daily interest rate and percentage, length of terms is going to be, we're going to say, we want to trade a system for 100 days before we take a payout, right? Reinvestment is going to be 100%, right? If you guys trade live accounts, right, and you can actually get a system that you get to remember those education phase, testing phase, risk profile phase, compound phase. If you ever get a live account into the compound phase after the 14-day risk of ruin, I'll show you how that's what this daily reinvestment rate is. Like you'll drop this down and start paying yourself out of that, right? Include weekends, no, right? Start date here, right? So now we're going to calculate, and we can have a general guideline. What in the tarnation? That did not do it. This thing ridiculous. Let me refresh. And we entered 3,000, right? Oh, the 3%. Like let's say we want to make 3% each day of this 3,000, right? 100 days. Reinvest, meaning we're not going to pull money out every day to pay ourselves and live off of this. No. Right? Calculate now. There we go. Now we can see, right? We can see that on day one, this to meet our goal of growing this account 3%, right, over 3,000 over the next 100 days, right? We know that your principal grows 57,000 if you do this right. Right now, I don't want you to think that I'm going to make profit every single day, right? Because that's not correct, right? So, but we know based off of what day we're on, how much we should be essentially earning, right? So let's say today we made $90, right? Cool, $3,090, right? We make this amount every single day for the next 8 days, then we take a losing day. Well, we just pause and go backwards. How much was the loss? We'll go back to that point in the day, right? All right. So now, as you can see, right, you know how I taught you that you need to get out of the 14-day risk of ruin phase, then you need to put a buffer, right? Because if I'm going to go back just a little bit, right? So if, right, my beginning balance is $3,000, right? And in this strategy, I'm risking 5% risk per trade, right? Do I continue to risk 5% on $3,000, or do I risk the actual rolling P&L, right? Like right here is $4,011 with that 5%. Which one do I do, and why do I do it? The original amount. Why? Why do I always go with a fixed original amount when it comes to the beginning balance? Whether you trade prop or whether you trade, it's going to increase. I'm about to show you how to do that, right? Because of that risk of ruin. When you trade, that risk per trade in relationship to the rolling P&L of where it's at, you will always be in a 14-day risk of ruin phase. Does this make sense to you? Hopefully you guys had some aha moments right there, right? So now we're going to go back to the compound, right? Now I got to find it. There it is. All right. What the crap? All right. So, knowing what you know about, yeah, go look at the tweet, read it, Dale, and then see where it's at in the tweet. All right. So, knowing what we know about how we're going to position risk per trade based off of account size risk per trade with the formula that I talked about in the tweet and entry and stop location, right? Knowing what we know, right? Now we're going to keep this in the back of our mind, right? This is our goal. Doesn't mean we have to make this exact number every single day. If we increase, like let's say this day we make 180, well, guess what you have to do, right? You have to jump forward. If you lose 180, you have to start all over, right? So as you can see, like the number goals here are just fine, right? So it's not until, right? So let's look at this strategy. Let's say it's the 930 strategy, or this strategy right here, whatever it is. We can see that within this strategy, right, with $3,000 account, I gotta sneeze. Oh, shit, I wasn't able to click mute fast enough. I'm sorry. So we weren't able. Well, this is the P12, right? We can see 150 lost, 213, 22, 200, 22, 211, 150, 150 lost, 150 lost, 214, 150 lost, 212, 213, 209. We can see the stagnant process of lose 150, make $200, right? So we can ride that with this compounding calculator to meet our quarterly goal, right? Until we start getting into day 30. Now, in day 30, we've maintained our goal of this, right? Right? For the compounding effect. Now, we're required higher compounding goals going forward. What do you think we have to do? What do we have to do? We have to increase size. Now, how do we increase? Nope. Think about this. Think about this. If we increase risk, what is that going to do to these numbers over here? Stop versus TP, right? We're going to get more if we increase this risk per trade. What are we exposing ourselves to? Blowing out, risk of ruin, right? Off of this strategy. But let me go back to this. Compounding calculator. But right here, we start seeing that the strategy now, the account size is now around $8,955, right? So we have a fairly good buffer relationship between the strategy and the compound and the risk of ruin, right? But now we know we need to adjust our beginning balance. We need to adjust our beginning balance to start reflecting the compounded numbers. So now we get permission to take even though our accounts this whole time has been 8,000. Let's say it was right here on day 35. The account size was 8,441, and we've been position sizing off of a $3,000 account. So we've got a $5,000 buffer in it, right? So now we can start. We'll come over here. We'll say, all right, we're in the period of needing to make $300 to $400, right? Right, and you start figuring out these stupid fucking Excels. They're not freaking calculating. I'm still working on this, right? You can start adjusting that beginning balance to reflect, right, the higher position size, right? Because the relationship between the risk per trade and the beginning balance will increase the TP and the stop loss, right? So now on this indicator, you have the ability. I just went on and put that compound and calculator on here too, because nobody in the middle of the day wants to go to an Excel sheet and figure out how to position size, or go to an Excel sheet and figure out how to compound and what the daily goal should be, right? So you can see, right, this controls the position size, this controls the compounding effect, right? What is your target daily return? And this is for you to figure out, not me. Investment, days to project, etc., and your start date. So if you're already doing this, right, like you can adjust the day when you started it, and it will give you it all right here. Right? Does this make sense? This was a very
I guess one question would be on prop accounts. Are you putting your account size at your max loss, so like $1,500 on a 25K or whatever, as opposed to?
It depends, right? So for me, right, if I'm in eval phase, and this is going to be the most degenerate answer I've ever given, right? Let's say this is my prop account. I'm trading a $2,000 account, which means it's a 50K account, right? This risk for a trade is between 15%, and it's not adjusting. This is fucking. This one's not even 14. Let's see. All right, let's say no. This doesn't show it. I need to build one master one. Because now that I built the indicator, this would be. All right, let's see this one. So $2,000, 5%. That's if I was trading a live account. If I'm on an eval, yes, it worked. All right. Let's just ignore this. That's where the break happens. Right? We can see that I'm risking a hell of a lot more. Right? And I can see that $300 is a fixed stop loss amount. So 3, 6, 9, 12, 15, 18, 1, 2, 3, 4, 5, 6 stops in a row. I still didn't blow that account with 15%. But, right, how much do you have to make in a 50K prop account? $3,000. So I know this strategy, which is the 930, the 930 can go 6 days in a row losing $300. And this $2,000 account will still be okay with a 15% risk per trade, right? But I can also see if it goes on a win streak, right? 1,200, 900, 900, 900, right? In 4 days, I can pass that account, right? So I'm willing to risk a shit ton. And why do you guys think I do that? Quantum does it, right? Is time. I'm not getting paid for that trade time, right? So I'd rather lose $50 on the prop account, right? Than to waste my time trading a simulated account when I'm supposed to be making real money. Now, when we get into month, and that's, some people would consider that gambling. I consider it gambling. Fuck, dude. Who gives it? I don't care, right? But then when I get into the actual live status of that account, then that's when I reset that, right? When we go into month 3 and we buy you guys your prop accounts, right? We're not buying you those prop accounts for you to get paid, right? We're buying you those prop accounts so you can sync the market condition tool, the daily profile with the different trade systems and know when to turn them on, off, and do all this position sizing so you can see, right, how it all syncs together. Yeah, like Sniper, like, just being honest here, like, I don't care about evals, right? But if I'm trading this thing live, that's when I'm trading it. And I'll keep that buffer. I usually keep, like, because I only trade top stuff, I usually keep like a 5K buffer in between like what I'm position sizing and what I'm actually, there's a 5K buffer. All right. What were we just talking about? So does anybody have any questions about how we position size based off of the beginning balance, the risk per trade, entry and stop, right? And how we sync that to our compounding goals? Because I really do need to move on with the class. All right, it's going to take a lot of you guys, and what I'm doing is I'm reaching. JCap was supposed to come talk doing the trade strategy, and I wanted you guys to see how if you take a repeatable workflow process, a repeatable trade strategy, you can still make money. He was going to be the representation of that, and he's still going to come. It's just going to be at the wrong time, right? And oh well, right? Now, next week, when we start getting into the position sizing strategy, right? Oh, why can't I click on? Right? Right. I'm bringing in Chris Dover, who's an ex-Marine and an ex-state guy who I know. Right? But he used to trade, right? And he used to trade professional prop, and now he just trades retail prop, right? And he will never be on the leaders boards because he literally trades proper position sizing based off of these kind of systems. But I'm telling you, this dude milks these prop firms, and he'll show you, right? But he's going to come in, and I call him the grandfather of position sizing. Actually, he's the dad. Van Tharp is the grandfather, right? And I've learned one-on-one from both, right? But like he's going to come in next week and discuss to you not so much the strategy, but the position size and aspect of it, and how this made him successful for 10 plus years as a prop trader and 5 years before that as a professional prop trader, right? And right. So that's coming next week, and I know he won't bail out on me like JCap did, but JCap got super busy, right, with interviewings and being a flyboy and a celebrity, a trading celebrity, and all that. All right, so now that's how you use this calculator, right? Now you have no excuse to say, "Oh, I don't like to go on a Google Drive to figure out my position size, and I don't really pay attention to my compounding goals." Right, of that trade strategy of my actual account, because it's all right here on TradingView. All right, cool. All right, I'm going to. All right, so now let me see what was on my agenda for today. Damn it! Why did I go into replay mode? All right, what were we talking about? Captain Backtest. All right, and don't worry, like next week is the week where we sync it all. All we're gonna do next week is talk about different ways and positions, all that. Okay, Seclin. I don't consider. Okay, so listen, you're talking about prop account. He says when you say use a 5K buffer in the prop account, do you mean, for example, 50K account? You don't with the first 5 profits? Yes. Leaving the account balance at 55K? Yes. Right, but get out of your mindset. It might help. That's a 55K balance. How much of a balance is that? For a 50K account, right? How the drawdown exactly, Delco? So it used to be funny because I'm not going to scroll that. All right, so let me make sure. Yeah, I think. Well, I mean, I did automate the tick value for whatever chart asset, but I have to go through all the futures and make sure they're correct with the actual tick value. So I'll probably have to do some updating, or I'll get pissed off and you guys will. Yeah, sniper, go long right now, right now. Trust me, go long, bro. Go long, right this second. You know why? Right? What about P12 50%? Right? We're heading for the highs. Right? Right? Previous day lows right here. What did we do? We sucked down. We looked below, sucked back into the range. Breached previous day 50%. Go long right now. Now we're above previous day mid. Right? Go long. We're about to turn London into false. Go long. Right? Front run NFP Friday. Get better pricing than the people who are trying to. There you go. Go long. I know I went long in Asia too, bro. You, me, PDFX. I'm fucking with you. Sniper, put your life savings into the longs right now. Hey, man. Have fun. I know you don't have life savings. You're like 20 years old. All right, let's get into the captain back test. I'm fucking with you, by the way. All right, all right, all right. So we said, what kind of strategy is captain backtest? What's it? What kind of market condition does it perform well in? It's a trend, right? So out of our daily classifications, what should we be looking for to even turn on captain backtest? What tools do we have that let us know? Yes, turn on captain backtest. if we start spotting a DWP and a DNP. So how do we do that? P12, yes. Hourly's, kinda, yes, for entry. Well, yeah, the daily classification. No, 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 and no. Yes, we'll try and figure out a DWP and a DNP. All right. 930, Wagner, go more in detail. Because that's one of the significant different ways you identify DWP versus a range and the relationship of what in the 930. The 10 o'clock, yeah, the 10 o'clock in relationship to the 930 and the quarters. Can we get back below 930? Are we using 10 o'clock to swipe back and forth to 930, or can we not even get back to 930, right? So that's a good clue. But what else do we have that we use every single day to turn on a trend light condition, and what would that look like? You guys going down the right approach. Okay, Asia, London, not broken. Cool, yes. I'll accept that. What else? Low day, high day, already in, absolutely. Do not front run captain back test on the front run 3 hours from 9:45 to 10. You don't even have the direction until after 10. All right, Asia and London in agreement. Bingo, bingo, bingo. And there's one last thing. One last thing. You guys are missing it, and it's probably the most important one. If we're expecting a trend style trade, what has to be left to utilize that trend? Distros. Enough distro left. Now, we don't have to necessarily rely on New York 1 distro because remember, right, the point of captain backtest is the front run, right? New York 2 and a high day or low day in the day trade, right? So we need to have enough daily distro left, right, to facilitate this trade. So, right, if Asia and London just have a rip, rally, and roar effect, but we don't have enough daily distro to meet the 50 basis points, then we know, like maybe we should not take captain backtest because the daily distro has been maxed out. Right? So this is how you align conditions. Right? What you guys just mentioned off is how you align. Do I turn on captain backtest or do I turn it off? Right? So now good example. What time frame do we need to be on for captain backtest? 10, right? So just using captain backtest, let's go right here. Okay. So think of it like this. High day, low day. What do you trade? You're saying that New York 1 is going to be a false, and that you're putting in the morning high day, low day review. All right? Captain Backtest is telling you that the high day, low day is being in. I don't want to confuse you with that. Never mind. Just kidding. All right, so you should be on the 10-minute time frame. All right, mark out your highs and your lows. What highs and lows? 69.59. So there's your low. Nope. All right, there's your high. All right, so the moment we cross over this high, what direction do you trade captain backtest? Long. Yep. All right. So you wait for a pullback, right? This is a very close pullback, right? So now we're going to talk about how we position size, right? We know how to turn it on and off, right? But now, right here, we did the pullback, or right here, we did the pullback, or right here, we did the pullback. Let's find entry first, right? How do we enter? How do we enter? After retracement, well, on the 10-minute, what does that look like? What was the entry criteria I gave you? Nope, 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 and nope, 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 and nope. What do we have to get on our side for the entry? Proper what? Proper displacement, momentum. We're going to use the 10-minute to do this. Right, so we wait for the pullback. Right? We'll consider this inside bar pullback, right? Even though I like to see it take out the 10-minute lower. Right? Now, what do we do with our line, our pink little line? Put it above pullback candle. And then now what do we have to see to trade? To enter a trade. Close above. So now, right, we can enter the trade on the next 10 minutes, right? Use hourly quarters, use New York 2 pullback, whatever you need to do, right? But now you have the go SQL to find entry, right? Now we got to figure out our position size, right? On this day, we have maybe, it says we moved 2.94% when we moved 547 candles in a 667 10-day median range, if you're listening. All right. So, there we go. We know that we have somewhere between here and here to complete the 10-day range. I mean, the daily range, right? Is this enough to take 10-day? I mean, Captain Backtest, yes, well, above the 0.51, right? But now we have to figure out the position size aspect, right? We have distros, right? New York 1 distro. Did we max that out yet? New York 1 is maxed out. So if you're going to take, literally right here, if you're taking this long now, right, based off of the overextension of this and where we are in price and time, right, should we take 2.5% risk per trade, 5% risk per trade, 7% risk per trade, or 10% risk per trade? Based off of, we know that we're turning it on 2.5. Why? Because we know that there's a large probability of this pulling back until 11:30 when we get new distro, right? Okay. So we wait for lunch. Okay, so does everybody understand the entry criteria? The cool thing about this is whether you enter off of this pullback or this pullback or this one, as long as you have enough daily distro between entry and high day, especially when you're expecting an end of day high day, right? You can continue taking this trade, right? Spinny, you know I'm not being disrespectful when I call you out like that. I'm just bringing it to your attention because I know I'll forget to text it to you. All right. So does that make sense? We talked about a lot of stuff within this last hour. A lot of phenomenal stuff. Right? But I will say, right, what I want you to do is I want you to start with this tweet, right? And I want you to go through and read all the threads, right, in this tweet, right? Then I want you to go to this free indicator tweet where I quote this one and read all of its tweets, right? And really give yourself a fighting chance, right? And understand why the crap this is probably more important. And then if you really want to get into the details, go to the retweet that I put out yesterday called Still the Holy Grail. And I posted this September 26th, 2023. And now in this one, I incorporate the win rate, the risk to reward, right? Your expectancy, all that stuff that confuses you guys. I took that out of this one until you can understand the basic concepts of this. Because when I started putting the real edge of what I'm talking about in it, just confused you all. So like now I'm trying to dumb it down a little bit, let you understand the concept, give you a fancy little indicator that does it for you for free, right? That does it easy, right? And that way you can truly see that your stop size doesn't matter, right? And you can stop falling for these idiots that, never mind. You can build your business plan, whether you want to trade with wide stop or tight stop, right? You can see that, guess what, right? As long as your position size in relationship to that, right, you're going to be okay. And your job is to get out of the 14-day risk of ruin period, right? And you know that if you do use a wider stop, what's in the back of our mind? We know that our job is to get through the 14-day risk of ruin period. So we need to position size correctly, whether we use a large stop or a tight stop, right? The end goal is to get out of that 14-day risk of ruin period. If you use a tight stop, you're still risking the same amount because you're taking more contracts. If you're using a wide stop, you're taking less contract, but you're still risking the same amount, right? Read the tweets while I break it down, use the indicator, and know that, at the end of the day, the goal is to get through the 14-day risk of ruin and start building that buffer and keeping the compound goals aligned, right? We do know that the tighter stops and more contracts lead to higher TPs, but we're not at that we're not there yet, right? We're trying to get out of the 14-day risk of ruin period, and we're trying to get, over the hump. We'll worry about perfecting, getting our entries as close to our stops later, but right now, in the beginning of all accounts and all compound goals, right, your job is to not blow up the account. All right? Cool. Any questions? Was this helpful? I want to ask you, right, what stood out to you? What aha moments did you have? Not asking you so I can, say I'm the greatest teacher ever, right? But to understand, my ability to teach, like what am I doing good that is leading to aha moments? No, sis. When do we increase our risk per trade? When do we increase our balance aligned with the compounding calculator? We increase that balance to keep up with compounding. But when do we increase the risk per trade aspect of it all? When are we allowed to increase the risk per trade? When what? No, 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 no. When do we increase the balance of, right? Let's go back to the sheet. All right, beginning balance. When are we allowed to increase the beginning balance? Right? To facilitate like a higher beginning balance. When we have a buffer, right? And when our compounding calculator is telling us, remember, like we went through the example. Let me put this back on 5, or yeah, it was on 5%, right? Right? Remember, like we were we're losing on this strategy $100, and we were making between 250 and 300. When we're in the compounding part of exceeding that on the compounding side, like so now we're in the fives, now we start increasing, right, this to facilitate the profits of that compounding. Does that part make sense? So now what controls, damn it, this one, right? What controls when we increase our risk per trade? Favorable market conditions. In this room, what do we use to control when we increase risk per trade? You see why I'm going to have to 4 steps in P12. Boom. The daily class. Boom. You guys nailed it. Right? Which also turns this system on and off. Right? This is the beauty of it. Doing it this way. Right? Not only, let me find it. Anybody who wants to like combine this. Not only do we have trade strategies. Right? Arnie, are you listening? Arnie, you better be in here still. Right? Okay, cool. Right? Not only do we have independent mechanical based trade strategies that we know the independent mechanical bases off of, which all have above 50% win rates. But now we use the 4 steps to do what? Turn them on and off, which does what to this? It increases our win rate, right? It decreases our lose rate, right? So like this consecutive loss period, which might have been 6 consecutive losses, will now decrease because we're turning that system on and off based off of the market conditions, based off of where we are in the daily profile. Is this all coming together? Right? Which allows us to increase or decrease the risk per trade and to not even enter the damn trade because market conditions are not favorable to that trade strategy in general. Now do you see why I say stop chasing, right? Stop chasing and start freaking getting after it, right? Learning how to perfect this part of it, right? So you have a market condition tool. We use the daily classification. Some people use volatility. Some people use economics. People use trend tools off the weekly, right? We use the daily profile because that's an internal intraday market conditioning tool. Right, then we sync. Do we turn these trade strategies on and off? And now we determine, do we increase the risk per trade? Because the end goal is to focus more on this than anything else. Right? Why is this more important than anything we do on the charts? Not expected. Nope. Time is currency, and the more you freaking sit here and get to day 10 and blow your account, and get to day 12 and blow your account, and get to day 14 and blow your account, and get to day 20 and blow your account, and get to day 30 and blow your account, because you can't stick to proper position sizing and put this single class in your trading, right? Until you can do that, like, you're just wasting your freaking time. You're missing out on the compounding, the 8th wonder of the world, and nobody talks about it other than they use the stupid ass saying that Einstein said the 8th greatest feature in the world is compounding, blah blah, but they don't. Where's it in your business plan, and how do you plan on getting there? It doesn't mean that we're going to go 12, 18 days in a row, winning the exact earnings that we're supposed to make that day. But now we are tracking where we are in relationship to this, and we're basing what our earnings per day off of that. But you know what's happening, right? You guys and gals are falling for the people who are slinging minis, right? Minis, right? And what they do is they buy 15 prop accounts, trade all of them separately, or they sink 5 here and sink 5 there and sink 5 there. And they show you which ones are winning. In reality, right? Like, this is why I tell you, and this is why on month 3, right? Like, you will see all my trades. Next week, Tradeverse will launch, and all my IBKR brokers will be synced to a live platform. They already are synced to Kinfo's, right? Which is a verified live track record. Because if somebody's going to influence the way you position size, these 1 mini freaking or 5 mini traders, like, I want to see how many times they blow up. Because mathematically, what they're doing, they are going to blow up. All right? And that's not what I'm about. Right? I'm actually in this space to ensure working class people do not blow up. So stop falling for the shenanigans and start falling for the stuff that's like been proven with science. Right? Stop falling for the dopamine sales pitches and start falling for the science, the mathematical science that tells you how to achieve your compounding goals properly. So we talked about a lot. We talked about how to properly take our beginning balance, when that increases based off of compounding, and when our risk per trade increases and decrease, and how we do all that, right? That way we can actually start achieving goals, right? Now, look, I get it, right? In a prop account, it is going to take you, right, a long time to pass that prop account. Totally get it, right? Thinking about this. However, right, when you actually start trading live, these daily earnings aren't that scary. They're not scary at all. Right? The problem is I keep saying you guys, but I know it's not you guys. People are trying to pull day 100 results on day 1 and then continue to pull day 100 results with the wrong. Okay, so what they're doing is they're taking a $3,000 account and they're trying to pull earnings for an account that should be 50,000, especially in a live account. All right, I'm gonna jump because I got shit to do. Realistic expectations. Boom, boom, boom. All right, make sure you record this video. Pocket Aces, if you don't mind, I want this video open to the public. Okay? You can even open up yesterday's video to the public as well.
I'm getting it out here, but yeah, I can do that.
right.
It's going to seem a little odd for people in the public, I guess, but I guess it's position sizing, so no, it won't. Yep, cool. Done.
Yep. Sounds good. All right, later, haters.